Perez, and this is my slide presentation over my financial ratio analysis. Um, I chose to do Apple versus Microsoft Corporation for my project. So let's get right into it. For corporate summary, I have Apple. Their products, they're consumer electronics, and they're a high premium brand. Um, Microsoft uses a software and cloud leader. They have different revenue strategies, and both are global tech leaders. I mean, you see Apple and Microsoft products in everyday um, society. Apple focuses more on premium devices and more of in a closed ecosystem, while Microsoft likes to emphasize a lot of software and cloud services with reoccurring revenue. These uh, these strategies, these strategy differences really impact their financial performance a lot. For my current ratio, um, we have the measures short term really not liquidity liquidity and Microsoft performs better. Um, the current ratio measures a company's ability to pay short term obligations, and Microsoft performs better, indicating stronger short term financial stability. Slide 4, we have quick ratio, measures immediate liquidity. Microsoft also performs better. Again, the quick ratio, really excludes inventory and focuses on immediate assets. Microsoft's higher ratio shows greater financial flexibility. For slide 5, yes, we have net profit margin. This measures profitability, and Microsoft performs better as well. Um, you know, Net profit margins show how much profit is usually generated um, from their revenue. Microsoft's higher margin indicates better cost control and profitability. Return on assets. Um, Obviously measures assets efficiency. And this one, Apple actually performs better. Reason why their return on assets measures how efficiently a company uses its assets, and obviously in this case, Apple performs better, showing stronger asset utilization. Return on equity. Um, this is a pretty big one. Measures shareholder return. This one, Apple again wins. They perform better. Um, Their return on equity shows how well a company generates profit from investor funds, and obviously in this case, Apple's higher ROE indicates stronger returns for shareholders. Asset turnover. Um, this one measures asset usage, and again, Apple performs better. Apple's asset turnover measures how efficiently assets generate sales, and Apple performs better, meaning it uses its resources more efficiently. Inventory turnover measures inventory efficiency, and Apple performs better in this case as well. The inventory turnover usually just shows how quickly inventory is sold. In this case, Apple's higher ratio suggests strong sales and efficiency inventory management. Debt to equity, this measures financial leverage, and Microsoft performs better. In this case, the ratio shows how much debt a company uses. Microsoft has lower debt, meaning lower financial risk, which means, and I'd like to take it as, if they aren't in as much debt, then there's probably a high chance that they are making more profit than they are returning. Um, Next, we have times interest earned measures ability to pay interest. Microsoft performs better. This ratio indicates how easily a company can pay interest on debt. Microsoft's higher ratio shows stronger financial security. Um, Earnings per share. This measures profit per share. Microsoft performs better again. Um, and in this case, EPS shows how much profit each share is earned. Microsoft's higher EPS indicates stronger earnings performance. Price earnings ratio, or PER, measures stock. This measures stock valuation. Apple performs better. Um, the PE ratio reflects how a stock is valued, and Apple's lower ratio may indicate it more attractively priced. At a more attractively priced. Um, and for dividend yield, this measures investor income. Microsoft performs better overall, and dividend yield shows how much income investors receive. Microsoft offers usually a higher return through dividends. And yeah, that is my presentation for today. Thank you.